Good afternoon and welcome to the BLANCCO Technology Group PLC full year results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. And I'd now like to hand you over to Adam Maloney, CFO. Good afternoon to you, sir.
Thank you very much, and thank you to all of you that are attending the presentation. First up, I'd like to apologise. I'm Adam Maloney, the CFO. Ordinarily, I would do the presentation alongside Matt Jones, our CEO, but unfortunately, he's managed to test positive for COVID whilst returning to the US after our investor meetings last week. So his voice is a little bit croaky, and so he won't be able to join us today. So I'll attempt to do all of his parts of the presentation and be as present it as well as I can. But anyway, we'll kick things off. And so what we'll do is we'll go through the highlights of the year that's just passed, give a little bit of an overview of the business, what it does, why we're the best of what we do, a little bit of a look back and look forward in terms of the strategy that we're implementing at the moment. We were able to complete an acquisition during the year that closed just a few weeks before our financial year end. We'll talk about what's going to drive growth in the business as we look forward, do a review of the finances, and then a little bit of a wrap up at the end. So kicking off on the first slide, highlights of the year. They are kicking off with some financial highlights. We had another year of good revenue growth. So revenue grew by 9%, 39.8 million in the year. That was constant currency growth of 12%. So when we go through these numbers, it's important to realise that only around about 9 or 10% of the company's revenue comes in the UK. So we do a lot of business all around the world, and we are subject to some currency fluctuations. And in this year, we actually grew faster than we're reporting because of the way that FX moved. We think that will change very much in the year ahead, and I'll go through that in a bit more detail as we go on. We operate with very high gross margins at 97%. They're up from 92% last year. We also have seen a good drop down into the profit lines, good cash generation, and we, as I mentioned earlier, that cash generation is despite us laying out $8.5 million for wipe driving, which I'll go through in a bit more detail. We can see the early stages from regulations being introduced around particularly in the EU on e-waste that we think will strengthen our growth, and we've been able to make some new hires within our sales team that I think give us really good confidence as we go forward. We've got the strongest team possible to deliver growth as we go ahead. So what did BLANCCO do? BLANCCO are the global market leaders in data erasure software. We can erase data from pretty much any device that a company might use. And we can give you an audit trail for that erasure. It will be the most certified erasure that you will see anywhere. It's a permanent erasure, and it's absolutely impossible for you to recover data from a device once it's been wiped by BLANCCO software. And so that means that your data is absolutely secure, making sure that you comply with all data governance regulation. But it also means that you can then take that device and either recycle it, resell it, repurpose it, whatever it is you want to do. You don't need to destroy it and send it into landfill, which is what happens in most instances. Why are we the best? We've been in the market for over 20 years. We've developed a huge portfolio of R&D patents with over 40 patents that we now have either filed or granted. We have a presence in 17 countries. We do business in around about 70 countries. We have auditable and tamper-proof certificates of erasure. That's very important for our customers to be able to deliver to their auditors proof that the erasure has taken place and that devices have been dealt with securely. We can erase across the broadest amount of storage media that you likely to come across. We can also deliver that software on the cloud, through offline, on premise, however it might be. We have over 2,500 customers, and we also have a large blue chip partner network of partners, including the likes of ServiceNow, AWS, Accenture, Deloitte, and Infosys. So we do see a handful of competitors around. They tend to be relatively small, and we would be, by far the market leader in this space. So in terms of the strategic focus, we operate in 3 markets. We only sell B2B. We don't sell to consumers, and the types of business we sell to really falls into one of these three groups. First is enterprise, which tends to be very large organizations with big IT teams that will buy licenses directly from us and do their own erasures of their own devices. So typically a customer in this space for us would be someone like an Apple or Microsoft, a Salesforce, those types of companies, very large companies. ITAD stands for IT Asset Disposition, and these are companies that specialize in the disposal of end-of-life IT assets. So if you perhaps weren't as big as one of those enterprise customers, you were an SME, for example, you might engage with an ITAD to come in and manage this situation for you. So for example, you've just refreshed all of your company's laptops and you now have a bunch of laptops that have been handed back in by employees and they now need to be disposed of. You would engage with an ITAD who would come and take care of that for you. And if they were doing data erasure, it's almost certain they'd be using BLANCCO's software to do it. And then finally, we sell in the mobile market. And the mobile market is a little bit different. So our customers tend to be mobile processors. These are the guys who will take your device once you've traded it in. So if you trade in your device at somewhere like a Carphone warehouse, they will then have an arrangement with one of these companies who process thousands and thousands of devices. They will run tests. They'll make sure that everything's wiped on the phone before they resell it. And so we sell into that market there. So looking at our strategic vision, looking backwards a little bit, we made an acquisition of Wipe Drive. Wipe Drive were formerly known as White Canyon. When we talk about competitors, they would have been one of the competitors that we came up against most regularly over the last few years. So we're pleased to be able to brought them into our fold. They have an excellent customer base, around 500 customers, and it's really strengthened our market position there. Been able to make some changes within our sales and marketing team over the course of the new year, and I'll go into a bit more detail on that in a moment. We've been able to look at our pricing. We now have the ability in markets to revise our pricing upwards. As our costs are going up, as we're seeing most other companies, every time we look to sign up from a supply side, if I'm signing off on a purchase order for NetSuite or for Salesforce, every year they'll put an automatic uplift on the pricing that's inflation linked, and BLANCCO are launching that initiative this year as well. So we're looking to put an uplift in pricing as we go through the year and see renewals come through. We also want to continue to develop our channel partner network, which continues to get a more and more important part of our business. And we want to keep our customer retention and satisfaction scores at the high levels that they're at now. And again, there's another slide on that in a few slides' time. So as we look ahead, we absolutely think that channel first is the way to go in enterprise. So at the moment, just over 50% of our revenue in enterprise comes from our channel partners. We want to see that get bigger and bigger. It's gone up from 38% in 2018. So we've seen a nice big uplift in it over the last few years, but we want to see that get bigger and bigger. We've reallocated some of our internal resources. We're going to very much focus on enterprise and ITAD, where we think the immediate growth opportunity sits most strongly. And we're also developing an account development program to drive sales from our existing customer base. Because whilst we can uplift pricing to get a little bit more revenue from our customers, what we tend to see most commonly is that they will use us for a particular use case in their business. And there's normally a lot of opportunity for us to push the solution into other parts of their organization. And then finally, sustainability, we think, is going to become an increasingly large part of our proposition. What tends to happen with most IT equipment, we believe 70–80% of all IT equipment at the end of life ends up going into landfill after being shredded. And clearly, that's not a sustainable way of doing business. So the sustainability element of taking on BLANCCO's solution of data erasure is a more sustainable way of doing business, and it ordinarily saves companies money as well. The acquisition I mentioned of Wipe Drive, we announced that acquisition on the 8th of June. The initial consideration was for $8.5 million US, with a further $1.5 million to come in June 23, depending on the retention of their customer base. We wanted to give ourselves some protection to make sure that the revenue we were buying was going to stay there. Our intention for the business is that we completely combine it within BLANCCO. We take the best features of their technology and implement it within one single BLANCCO product. So Wipe Drive is no longer marketed, the website is no longer open, and we intend to support all of the Wipe Drive customers with the BLANCCO products. What we saw in the most recent financial year before we bought the company was revenue of $3.6 million and profit before tax of $1.1 million. So if we look at what that means in terms of valuation, if we end up paying the whole $10 million for the business, we paid around 2.7 times revenue for the business and around 9 times profit, which we felt was a reasonable valuation. Almost all of the employees that were in the White Drive business when we acquired the business have now taken on BLANCCO roles. We've got some fantastic experience within the team who've already started really contributing to our product roadmap over the next few months. And we are seeing some of the features they had in their technology now being fed into the BLANCCO solution so that both of our sets of customers will have the best products available. And pleasingly, immediately after we completed the acquisition, White Drive's largest customer renewed their deal, which was just over $300,000, so almost 10% of their overall revenue, and that came in just before our financial year end. So really pleasing to see their number one customer come through. I mentioned earlier we've made some changes in the sales team. So unfortunately for us, our head of global sales for the last 5 years, Alan Bentley, decided to retire. He informed us of his decision in March and stayed with us until the end of June. And that meant we needed to go off and find a new management team for the business. We were also looking to bring in a new head of sales in the US. And so John Mellon was our first hire. John started with us in June. John comes with over 20 years of sales leadership roles. He's based out of Texas. He's most recently the Chief Revenue Officer of a company called Sonatype, but impressively, he was also 12 years in sales leadership at NetApp. John's first hire was to find a new head of sales in the US, and he managed to find Maurice Uenema, who started with us early in the new financial year. Maurice has over 14 years experience in IT security, and he's had senior roles in sales at Pero Systems and at Dell. And then our final appointment came with a little bit of a restructure. So because John is based over in the US, it would have been very difficult for John to manage the European and Asian teams. So we now have promoted Fred Forsland, who's been with the company for over 20 years, to be the head of international sales. Fred has been very much a spokesperson for BLANCCO and for data sanitization as a technology now for many years. And Fred now heads up those Asian and European teams. So we go into the new financial year with a new, energized sales management team that I think we feel very confident of success in the future years. We also mentioned earlier how pleased we were with some of the customer measures. And the first one is around customer retention. So we looked at all of our customers who generated more than £100,000 of revenue. There were 134 of them, and every single one renewed with us during the year. So 100% retention rates for those large customers. Really pleasing. We think that's really the biggest indicator we can get of customer satisfaction. But we also reach out for sort of customers for net promoter scores. And we pleasingly saw the third year of really high scores and the third year of an increasingly good score. So the score for us this year was 62, and we had 348 respondents, which was up on where we've been in previous years. A typical software company would probably be looking for scores somewhere in the 30s. So really pleasing that our customers are scoring us so nicely. I'll move on to growth drivers. And really, we see growth drivers coming in two real areas. Firstly, around data privacy. Most of our customers today buy BLANCCO because they're looking after the data that they store. And they have to make sure that data isn't compromised, or they're potentially going to be subject to very significant fines. We've seen a raft of regulation come in on this over the last few years, which started with GDPR, which was introduced in 2018, which surprisingly was only 4 years ago. It feels a lot longer than that. And as we sit here today, it's expected that by the end of next year, 75% of the world's population will have data covered under some form of modern privacy regulation. Very, very similar to GDPR in most locations. We're seeing that result in big uplifts in the amount of money that companies are spending on data protection and compliance. And we continue to see more and more regulation come through. So in the US, where often this type of regulation is longest to come through, we're seeing the California Privacy Rights Act is just about being enacted. We've also seen some new regulation coming in, which is called CMMC, which is particularly aimed at how companies who work for the US government look after their data. And there is specific reference to data erasure amongst that regulation. And as that sort of gets to be enacted fully, we'll be keeping a close eye on that. So we think that's a really strong opportunity for us. One sort of case study that really highlights the issues here, and I think last week this story really broke, that there was a major US bank who was fined $35 million for failing to properly dispose of devices containing customers' PII. And it was reported that this bank engaged a third party to take away these devices. The third party specialized in removals and storage, but not in data security. Eventually, these devices ended up on an internet auction site, exposing 15 million customers' data. And these breaches date back to 2016. Pleasingly for us, this bank realized that there was an issue here some time ago and approached us, and we've been working with them since 2019, and we now form part of the solution. They've been able to present to the regulators as how they've got on top of this issue. But it kind of highlights, in total, they've had $95 million of fines in relation to these breaches. So it highlights the folly, really, in not looking after this part of your business properly. And we can see how punitive the data protection penalties are now. We've seen the penalties in 2020 of 0.2 billion rise to 1.2 billion in 2021. So really significant uplift in fines. These fines are getting bigger and bigger, and companies can't ignore this. The second thing which we think is going to drive growth for us, and this one's probably a little bit more into the future, is around e-waste. So according to the UN, 54 million tons of e-waste were generated in 2019, and of that, only 17% was formally documented to be environmentally soundly managed. In other words, it went through a recycling process. 83% of it, people have no idea what happened to it. We believe that most of it ended up in landfill. Much of it ended up in landfill, not in the country from which it originated from. So we see very large landfill sites in countries such as China and some African countries where this equipment is shipped out and buried in landfill, releasing lots of harmful chemicals into the earth. And as we start to see more and more sustainability initiatives, it's hard to believe that this will continue. And as I mentioned earlier, our key competitor is physical destruction. We don't see too many other data erasure players in the market, but we do still see the vast majority of equipment going into landfill. And as companies become more and more sustainable, we believe that's going to push business more and more our way. We don't think that initiative has really reached through to IT management teams yet. The data governance is still their key concern, and many of them haven't really paid enough attention to sustainability yet. So we think this drive is yet to really come through. And I think what will help it come through will be the increased regulation that we're beginning to see. So in March, the SEC announced that there will be a requirement for all companies on the stock exchange to make climate-related disclosures. We're not clear what they are yet, but it's expected that there will be around carbon footprint, there'll be some statistics around waste, and you'll be producing those on an annual basis. So you want to make sure that your statistics improve year on year and that you're seen as being a sustainable company. And we see that in many other parts of the world as well. Most tellingly in the EU, there are a lot of new initiatives coming in under the Circular Economy Action Plan within the EU. And that includes regulation on European companies to also provide climate-related disclosures. So this all seems to be coming in through the course of 23 with full reporting in 2024. So I'll move on to the finances. And as I mentioned earlier, we grew revenue at 9%. That was 12% once you adjust for currency movements. The gross margin, you'll see there, uplifted quite nicely from 92% to 97%. So in last year, the main part of our cost of goods sold was third-party licenses we were buying in to enable us to bypass activation locks on mobile phones and to identify who the carrier is. We've now developed that capability internally, which meant that we didn't need to buy those licenses in anymore, and therefore our gross margins increased to 97%. And that's where we think we'll stay. Our cost of goods sold now are really just items of hardware which some of our customers buy from us, isn't really a key revenue driver for us and represents a small part of our business. Other than that, there's pretty much next to nothing. We do see operational gearing in the business as well. Our cost base is largely fixed. It's headcount. About 70% of our cost base comes from headcount. And as we increase our top line, our cost base shouldn't have to increase at the same rate. So we see big drop throughs of revenue. So in a year when revenue grew 9%, operating profit grew 23%, and EBITDA grew 13%. So we're now up at 16% operating margin and almost at 30% EBITDA margin. So we continue to look to improve those margins year on year. We've done that despite this year, we saw a lot more in travel costs come through in 22 versus 21. Obviously, as lockdown conditions have been eased around the world. And we've also seen some pressures from wage inflation over the course of the year, which we continue to see, but we think they're beginning to ease a little bit now. With respect to the balance sheet, as I mentioned earlier, our cash ended the year at 6.2 million. It was previously 10.1 million, which on the face of it means we've gone backwards. But we did spend 7.2 million this year on the Wipedrive acquisition. We also did a share buyback to buy shares into our EBT for employee option exercising. Back in December, that was another £1.5 million. So if you add those two events back in, cash would have ended the year near enough £15 million, meaning that we generated almost £5 million in the year ahead, in the year just gone. So good cash generation, and we expect that to very much continue. The 1.3 million in the deferred consideration line is the $1.5 million that potentially we're paying to Wipedrive in a year's time in relation to their earnout, and we do expect that to pay out in full. I'll now break down the revenues by the three markets that we operate in. So first of all is enterprise. Enterprise before this year have been growing at an average of around 18% a year. That slowed a little bit to 9% this year, and we think much of that is really down to the disruption we saw in the sales team this year with our head of sales in the US and the head of global sales both sort of resigning through the second half of the financial year, and us taking some time to get their replacements in. And we think that just meant that we just lost a little bit of momentum in closing some deals. We'd expect enterprise ordinarily to be a 15 to 20% growth market, and we expect that to return to those kind of levels in the year ahead. In ITAD had a really strong year. We saw 23% growth in the ITAD market, which was very strong growth. We'd seen in the previous years it growing at sort of just over 10% a year. But what we have seen is a return to work after the pandemic, meaning that ITADs could visit customers, help them manage their IT estate, which had become aged through the pandemic period. And so we do think there's a little bubble of hyperactivity that we've seen in ITAD over the past few months into this financial year. It will probably settle down a little bit. We think ITAD should be a 10 to 15% growth market, but really pleased with how it's performed over the past year. And then finally, we have mobile, which has grown slightly by 2%, which doesn't sound impressive, but our overall sense is that the mobile market has been challenging this year. When we speak to our customers and look at the data from their purchasing from us, most of them are processing 10 to 15% fewer handsets this year than they were last year. And we think that's reflective of what's happening in the smartphone market as a whole, with actually new smartphone sales being down. We saw last week that Apple had announced that they weren't going to be expanding production for the iPhone 14. So they estimate that actually that demand isn't really going to pick up. We're a little uncertain as to how the mobile market's going to look for the next 12 months, because as around the world we see high levels of inflation, we see cost of living pressures on a lot of people. Will people be able to buy a brand new handset and therefore trade in their old one? Or will it mean that actually people are more likely to trade in old handsets? Because we still believe it's a fairly small proportion of people that trade in old handsets when they buy a new one. So if you're able to get a really good payout on an old iPhone, then maybe you're more inclined to trade it in. So until we see how that plays out and what the supply into the secondary market is going to be, it's difficult for us to know how mobile is going to shape up. We think long term, it's a 10% plus growth market per annum, but probably in the year ahead, it will be. We think it might just be a fairly flat period. The other thing we'll see as we look forward to the year ahead is we do a lot of our revenue in US dollars, and as we've all seen in the UK, really big increase in the value of the dollar versus the pound. And that will mean that our revenue figures will get inflated over the coming year. We do about $20 million of revenue in the US. So we'll see a fairly big uplift in that as a result of currency movements if they stay where they are. Last year, the average rate we used was $1.3 to the pound, and that's now, as you all know, more like $1.10 to the pound. So fairly big movement. The other impact it will have is we've got quite a big cost base in the US as well, of around $15 million. And so that same currency movement would inflate our cost base in the US. So we'll see an inflation of our revenue and inflation of our cost base, but actually there's a net $5 million overage of revenue versus cost base, and that will come through as a benefit to the business. And probably the last thing I'll just mention on this slide, I did touch earlier on channel revenue and how that was coming through in the business. We continue to develop our channel networks. Although enterprise grew at 10% this year, 23% was the number of the increase in channel revenue. So that's now 8 million of 15.4 million. There's 52% of all the enterprise business. So we consider channel revenue within enterprise to be our fastest growth area. Finally, on the finance slides, just break down the numbers by geography. We can see that Europe has been our strongest market. It grew 20% in the period. We see a lot of ITAD activity in Europe, and I think that's really the good year we had in ITAD has really fed through in the European region. In the Americas, we had an okay year with 11% growth. We'd expect to grow faster than that in the coming years. We see enterprise most primarily in America, and we think some of the biggest businesses in the world will continue to be big users of BLANCCO there. And then finally in Asia was only 4% growth. Asia's dominated really by mobile activity, and so if mobile's not going particularly strongly, then that will feed through into the Asian numbers. But you can see we've got a pretty good spread of where our revenue takes place. We're not particularly exposed to any individual currency, and we have a pretty good spread of natural hedges in all of these countries. So I'll just wrap up on the last few points. As I mentioned, this is the fourth year now that we've seen good growth in revenue, profit, and cash in the business. We think the outlook is extremely promising with the regulatory things that are happening, whether it's within data protection, data governance, or around sustainability. All of those things are going to help keep the business growing. We've come into the new financial year, obviously early in October, so we've had the first quarter of activity, and we feel really positive about sales and pipeline activity in that first quarter. Gives us really good confidence that we're going to be reporting another very strong year. Pleased and delighted that our customer base is reporting back so strongly with their net promoter scores and also with the customer retention data that we have. Very happy with the WipedDrive acquisition. We often get asked if this is an acquisition strategy that we're implemented, and I think in this particular case, this was more of an opportunistic acquisition where the WipedDrive assets became available to us and approached us about an acquisition, and we felt if we could get that done at the right price, then we would do it, and maybe we would look at other opportunities in the same space if it came to us, but we don't have an active M&A strategy about buying competitors at the moment. Channel route to market through to enterprise, we continue to think is the largest growth market for us, and we will focus a lot of our efforts on that in the years ahead. Lastly, we have a new sales management team in place who've kicked off initiatives on uplifting some pricing, really developing some new channel partners to take the business forward and bring some new energy to our sales and marketing team, which we think can only benefit us. So I'm sure you've heard enough of my voice now, so I will take a quick sip of water and before I just come back to questions.
Adam, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just using the Q&A tab situated in the top right-hand corner of your screen. But just while Adam takes a few moments to review the questions submitted today, I'd like to remind you that recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Adam, as you can see, we received a question throughout today's presentation. If I could just ask you to read the questions and give a response where it's appropriate to do so, I'll pick up from you at the end.
Thanks very much. Yes, so far, there's only a couple of questions have come up, so I'll read them out and then look to answer them. So the first one was, can you talk to your target operating margin? EBITDA growth looks great. Will you look for more acquisitions to enhance this? So yeah, in terms of operating margin, I mean, our target is to improve it every year. So we look to probably put 1, 2, 3% on that every year. A lot depends on how quickly we can grow the top line because the cost base is going to be relatively fixed. But we try and budget to put a couple of points on a year. So now at 16%, I'd like to think we could get to 20% by the end of the 24 financial year. So that's a little bit of a short-term target we can go for. But beyond that, we think we can keep putting on a couple of points a year. In terms of further acquisitions, as I mentioned, I think we do have some ambitions for other acquisitions, but probably not like a wipe drive acquisition. We feel as though there are technologies out there which would be complementary to BLANCCO's technology, and it could be in data discovery, it could be in data classification. We think that might go very nicely alongside our business. The challenge we'll have at the moment is with our own valuation being down due to stock market movements. There's also a lot of the private companies have very high valuations of themselves. So finding something which will fit into us from a valuation perspective in the current conditions is going to be difficult, but we'll continue to look. Next question I've got is with mobile being circa 50%, how do you see the transition of the business to move to a more channel partner focus? I'm not quite sure I completely follow the question. So at the moment, channel is just over 50% of our enterprise business. And we look to continue to develop those channel partnerships, bring new channel partnerships through, and I expect we'll be announcing several over the next few months. And we look to push that percentage of channel revenue of enterprise up, hopefully more towards 70% from the 52% it's at now. But I may not have understood your question fully there. So if you want to try that in, send that in again, then I'll have another go. Next question is, do you regard yourselves as working at capacity? How do you define capacity? Do you have enough human resources? That's a good question. I think one thing is for sure this year is that we do feel as though we have reached kind of a critical point now with regards to particularly our R&D team. You know, we've hired quite a lot into that team over the last couple of years, and we've now got to a point where we probably don't need to add as many new heads every year as we have done. We've got a critical mass of fantastic employees. We don't think we need to keep adding quite as aggressively as we have done in recent years. So what I expect you'll see is when we see growth in the business in the mid-teens, I think headcount will be growing somewhere in the single-digit percent. So I wouldn't say. I think we always need more people as we do more sales. We probably need more salespeople. I think we'll always need more people as we continue to grow. But I think we are working near capacity. But you know, it's probably pretty unusual for many companies to work with a lot of spare capacity. Your shareholders have witnessed a decline in share price over the last few years. Also, there's been no dividends to compensate. Contrast this with a share buyback of approximately 1 million shares to be handed out to employees. This doesn't appear to be very fair. Well, yeah, I'll try and defend the position on the question. I mean, obviously, what we had was we give share options to employees on an annual basis that relate to 3-year targets that the business has to achieve. Those targets relate to revenue, profit, and cash generation targets. And if those targets are met over a 3-year period, then the employees that ran the business through that period get rewarded through shares. So those shares would have gone to those employees that were rewarded in the options 3 years ago, and this was from achievement of targets. The purchase of the shares really meant that we didn't have to issue new shares to those employees. It meant that we could fund them from an employee benefit trust, and that meant that there was less dilution for shareholders. So we feel that that's a fair way for us to reward employees, that they do well when the company does well. Unfortunately, us, like pretty much every other tech stock in the UK, has suffered with market conditions, and you're right, the share price has gone the wrong way, but the company continues to perform really well, and that's what our guys concentrate on. Had a question about whether we thought about reporting in US dollars. And that is something that's come up from time to time. And I think as the US part of our business gets bigger and bigger, it's something that could become more and more within our thoughts. But it's not something that's going to happen immediately. We obviously do a lot of revenue in the US, but our investors are primarily in the UK, and we publish our financial accounts in the UK, and people are used to dealing in sterling. So it's not something we're about to do, but it's certainly not a silly question. It's something that we think about. The next question says, if you have such a large market square, where will your growth come from? So I guess that means if we have such a large market position, perhaps, where will our growth come from? Our growth will come from fewer companies destroying their IT equipment and looking to deal with it in a more sustainable way. So as I said right at the outset of the presentation, 70 to 80% of IT equipment gets destroyed and sent to landfill, so it doesn't use BLANCCO. So if companies decide they want to generate less waste, they want to recycle more materials, the only way they can do that without exposing the customer data is to use data sanitization software to wipe the data so it's irrecoverable, and that's where the growth will come from. So I think we have a really large market share of data erasure software, but that is quite a small market at the moment. We think that market should grow a lot. How does the sales team drive sales in enterprise? How much input control do you have over growing revenue here? Our sales team work with our channel partners in most cases to really drive revenue through into the business. So whilst its channel partners are often selling for us, those channel partners need a lot of hand-holding and being able to explain and identify how the software works. So we do think that working with the channel partners is going to be really key, putting more money into channel marketing, more money into channel sales, working with those channel partners, really trying to get them working well, because some of them are huge organizations. You think of a Deloitte, an Accenture, an AWS, a ServiceNow, all companies that we work with, huge organizations, and needs a lot of resource for that to work really well. So that's where we think we'll be allocating a lot of our resources over the next couple of years. Do we feel the need to increase our R&D spend? As I mentioned earlier, I think we've probably got to the point now where we don't need to increase the headcount in R&D by quite as much as we have done in recent years. So I think we've got a good team. We've got developers now in India, in Finland, in Ireland, and now a small team in the US after the acquisition that we did. So the overall R&D team would be over 100 people across those development centers. So I don't think we do. If you ask the head of R&D, he'd probably say that we do. But as the CFO, I'm going to say, no, I think we are in the right ballpark at the moment. We saw the Stifel research note that went out this week. They had a look at what percentage of revenue we were spending on R&D. It came out around 14%. They felt the market average was around that ballpark as well. And so we're in line with our software peers. Given our US orientation, have we given any thought to getting a US listing? Another thing that we've actually thought about and looked at, we feel as though we're probably a little small at the moment. That's certainly the advice we get from when we speak to anybody about it. We typically see that you've got to be getting up towards $300-400 million before you really get a lot of attention in the US public markets. And we're obviously quite a fair amount below that at the moment. But as we continue to look to grow the business and hopefully the stock markets come back and we see that valuation come through, then that's something we could certainly take another look at, but it's certainly not on the agenda right now. The last question I've got is, do we have an estimate of the percentage of shares held by UK private shareholders? I don't have the percentage, but it would be a very small percentage. I would say it would be less than 5%. So we've been running these type of sessions now for the last, I think, 3 or 4 years. So twice a year we'll come and do a presentation to retail investors. really to try and drum up more interest. We think it'd be great for liquidity if we had more retail investors interested in the market and in the business. But it's still quite small at the moment. So a very small percentage, but one we're looking to grow. It looks like I've reached the end of the questions there. So hopefully you don't mind me reading out questions, answering myself. I'm sure you're sick of my voice now. So unless there's any other questions, I'll probably stop there.
Yeah, Adam, thank you very much for that. I think you actually managed to address all those questions from investors. And of course, the company will review all those questions submitted today and will publish those responses out on the Investor Meet Company platform. But just before redirecting investors to provide you with their feedback, which is particularly important to yourself and the company, Adam, could I just ask you for a few closing comments?
Yes, no problem at all. Well, yeah, it's always a pleasure to do these sessions. Particularly enjoy the questions at the end because I think people tend to be more direct with their questions here than we often get when we go out to see institutions immediately following results. So it's always makes it more enjoyable. But I think, really to sum up, we're pleased with the progress we've made over the last 4 years. We have seen revenue, profit, and cash grow every year for 4 years. We're extremely optimistic about how the prospects look for the business going forward. As I mentioned, the market for us is really about trying to get every company who destroys their equipment at the moment to recycle it, repurpose it, stop destroying it, and use data erasure. And that's a really big opportunity for us to go after. We're confident in the prospects for this year coming. We've had a really good start to the year, but I think the regulatory drivers in both data governance and sustainability are going to be the things which really drive growth in the medium term, and it will end up in value being delivered for shareholders once the financial markets have managed to correct themselves and get back to the level that we feel they should be at. But thank you all very much for your time.
Adam, thank you very much for updating investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team could better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Blanco Technology Group PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.